Hi, Kumar here, and now we're going to go over Strategy 2 trading rules. I will now cover some very important rules and scenarios that need to be addressed for this strategy. Trend consideration when setup occurs. Long trades. Although we are trading against the immediate price movement, which is a C to D leg, we will be trading with the longer term trend, not against it. The only scenario when we will be trading against the general trend is when there will be a new trend forming, as I'm going to explain now. Now for long trades, the easiest trades to take here are the trades that are in an uptrending chart, with the MAs nicely going up underneath price action. These long trade formations here are no-brainers. So even though this is a reversal play strategy, when you look at the longer term trend, you are actually trading with the general trend. So here we have an ABCD, and even though we're going against a C to D leg, we're still going with the longer term trend, which is up. Here, we're obviously going against this down move here. Same here, and same here. We then will get AB equals CD formations against the general trend of the chart. If this occurs, this is what we do. First of all, we check that is the chart downtrending nicely with all MAs above price and trending down. Just like here, we have the MAs trending down, price is trending down, MAs are above the price. If so, we do not trade against the trend, so we leave any ABCD long formations here, meaning ABCD formations pointing downwards. So an ABCD long formation for strategy 2 trades means an ABCD that is pointing down, like all of the ones specified here. Now because the general trend is down, we do not want to take these trades. Even though some trades do work out, going against the longer term trend is high risk. Let me just talk you through the other scenario where ABCDs form against the general trend, but we can take them. If we look at this chart here, everything is trending down, the MAs are going down, the price is trending down as well. But what we look at are these major pivot lows. Here we can see that a higher low has been made. Here's the lowest low, and we've got a higher low made here. What that is showing is that demand and supply is shifting. More demand is being created here because a new lower low could not be made. This could show the possibility of trend changing. We then look out for more higher lows. And as you can see, these lows are getting higher without price breaking down any of these lows. This is showing a build-up in demand, which means higher prices. So in these cases, where a higher low has been made and prices are starting to trend up short term, we can take long trades here. So here we see an A, B, C, D. So even though this ABCD is going against a general downtrend, because this is a long trade, we can still take it because the major lows are getting higher, which are showing that a change of trend could be possible. So as we see, price rises and this trade works out great. Trend consideration when setup occurs. Short trades. The easiest trades to take here are the downtrending charts with all MAs nicely going down above price action. These short trades are no-brainers here. So even though we're playing a reversal play strategy here, where we're going against the C to D leg, when you look at the longer term trend, which is down here, we are going with the downside trend here. So we are always agreeing with the longer term trend. So with this ABCD, we're going against the ABCD motion, which is upwards, because it's a strategy 2 trade. But we're still agreeing with the longer term downtrend. Same with this ABCD, we're going short. Same with this ABCD, we're going short. Take all ABCD trades that agree with the long-term trend. We then will get AB equals CD formations against the general trend of the chart. If this occurs, this is what we do. First we check that is the chart nicely uptrending, with all MAs below price and trending up. If so, we do not trade against the trend. So we leave any ABCD short formations here, meaning ABCD formations pointing upwards. So for strategy 2, ABCDs going up are short trade formations because strategy 2, we go against the C to D leg. So all of these pointing up, we go short. But as you can see, the longer term trend is up, price is generally trending up, MAs are nicely going up. We need to avoid all short ABCD trades if the currency is in a strong uptrend. The other scenario where an ABCD formation can form against the general trend but we still take it is one like this chart. So as you can see, price is nicely trending up, MAs are nicely going up. So taking any short strategy 2 formations here would not be recommended. But if we start looking at the chart, we see that the major high cannot be broken and lower highs are being made. This means that supply is increasing and there can be the possibility of a change of trend. Once we see that more than one lower high has been made, we can start looking at ABCD formation up moves, meaning a short strategy 2 trade, and even though that short trade would be going against the general uptrend, because of the lower highs being made, we can still take that short trade. So here we have an A, B, B to C, C to D, and even though this short trade here is going against the general uptrend, because of what we've seen here, with the lower highs being put in and no major highs being broken, we can see that there is a shift of supply and demand. There is more supply coming in here, and there can be the possibility of a change of trend. So we can take this trade. And as we see here, the trade works out pretty nicely. Stop loss placement if nearest pivot is too far. This is a very important point that needs to be made here. Sometimes there may be an ABCD formation where the nearest pivot is too far away to place your stop loss. The way to judge this is if the distance from the entry to the stop is more than 75% of the distance from C to D, then it is too far away. It is difficult to quantify this distance as the distance between the entry and the stop, which is too far, as this is rarely dependent on the size of the ABCD formation in relation to the distance. So as a rule of thumb, we have set a 75% rule. As you get more advanced, you will start to get a good idea of what distance is too far away, and will adapt your strategy according to what you feel comfortable with. Until then, just stick to the 75% rule. So here we have an A, B, C, D, and we see that this pivot low here is higher than the actual D point, so we can't put our stop there. And as we see, going down, the first pivot low below the entry point is just way too far to put your stop. So we have the distance from C to D, which we'll label as X. 75% of X comes to this line here, and 50% of X comes to this line here. And that 50% of X is where we would place our stop in this scenario when there is no major low pivot in this area inside of the 75% distance. So the stop is placed here at a distance that is 50% of C to D, as the first pivot low on the left is further out than 75% of the distance from C to D. Here's another example. We have A, B, C, D. We've got this pivot high here, which is far too close to the entry point in order for us to put our stop there. We just can't give price enough room to breathe, so we wouldn't place our stop there. The next pivot high is way up here, and that is obviously too far out, certainly higher than the 75% mark of X, X being our distance from C to D. So what we will do is place our stop here, which is 50% of X, meaning 50% of the distance from C to D, projected up from entry. We do this because the first pivot high on the left is further out than the 75% distance of C to D, higher than entry. So I hope that makes sense. What we're just saying here is that if the major pivot highs on the left for a short trade or the major pivot lows on the left for a long trade are too far away, simply just put the stop 50% of the distance of C to D from entry. So that was the Strategy 2 trading rules. Let's take a look at a Strategy 2 trading example now. I will cover this in the next video. This is Kumar for Trade to Success University. Please go over to the next page to continue with the training.